Hey, what's up everyone? JT here. Welcome to Pineapple Money, where we'll talk about stock, market news, and investing for the long-term portfolio. So as I'm filming right now, it is November 12th, and markets just actually closed about 16 minutes ago now. And as you can see, Nio did close around 12% up, which is insane, which is a lot for Nio. They did hit a high around $49.20, which was about 14% up for them. And it's not even their earnings yet. So Nio is probably up because of sympathy plays from XPENG. And as you can see right here, XPENG did have their earnings this morning and they're up around 33%, $11 movement, which is insane for XPENG as well. But going back to Nio, I did not expect Nio to hit $48 so soon. Yesterday's video, or the video I did post early this morning, I did predict Nio would hit $48, but I did not expect Nio to hit $48 right after this following day. So I did make a previous video, like I said, and in that video I did explain how I expected Nio's earnings to play out, and also just check out in detail how I break down the price action and what I think will happen for Nio. But quick summary for you didn't watch it, I think Nio will probably run up towards earnings, sell off heavily afterwards, and then consolidate throughout the following days based on the previous quarter two earnings, which they did beat last time as well. So in this video, I'm going to talk about how to play Nio's earnings and also what I'm doing to play Nio's earnings as well. If you do find anything interesting in this video, please don't forget to hit that like button down below and subscribe for more content, and also let me know down in the comments if you made any plays already. Alright, let's get started. So first off, as you can see, Nio's earnings are already underway and they got catapulted from XPENG's earnings earlier today. I'm going to go over from top down by risk assessment, and of course more risk means more potential gains. So let's look into Nio's options. So right now I'm in the options panel for Robinhood on Nio. We're going to first talk about naked calls or naked puts. So if you're thinking that Nio will move up, go towards up a lot, maybe like 10% like today, those calls look pretty good. So if you buy a call contract, let's say for November 20th, which is next week, and I think Nio will go to $50 next week, you can buy this contract. Take a look at this. This contract costs about $388. So remember, each contract is by 100 shares, so this means $388, not just $3.88. But personally, if I were to choose call options or just naked options in general, I like to do options that are more further out. Let's say maybe in January, just because it's more further out, and I probably have a better chance of making my money back. But let's say I want to do something that I think Nio will probably go down for earnings. Let's say do a put. That's what its put is called. So pretty much I'm thinking that Nio will move down. Let's say maybe 10% after today's big gains. Those puts look really good. So looking at the put side, I think Nio maybe go down to maybe $47 strike price. I can take a look at this. This costs $200.88. IV of 160%. So this might look pretty good for me to buy because I think that Nio will go downwards. And typically for puts, I typically let go for 2 to 3 weeks out, just because choosing them right close to earnings can be kind of dangerous. But 2 to 3 weeks out, I just have some more time and more data. But in general, I would say that naked calls, naked puts in general are just more super risky. There's a higher premium to pay before earnings, but of course, if you're right, you can make lots of dough. But I would say if you're planning to go with naked options, definitely try to get rid of them before earnings on November 17th. Since Nio's IV, as you saw, their IV implied volatility is pretty high, and this will drop significantly after their earnings, which makes your premium that you pay drop a lot too. However, usually for contracts that are much further out, let's say the ones you saw that I chose in January per se, this probably won't affect it as much, but it's still there. So the second one I'll look at is something called a Strangle. So a Strangle is actually kind of interesting. This is actually pretty good for earnings play in general if you think something will move very dramatically. So let's say I'm thinking that Nio will move either 10% up or 10% down, but I'm not sure which way it is. I can buy both a call and a put. So for example, let's buy a put for $47 strike price for November 20th. And I'm going to buy a call also for around $50 strike price once it loads. But essentially what I'm doing is that I am playing both sides. So when earnings does happen on November 17th, let's say it moves dramatically past $50 or below $47, I will make money. And hopefully it'll move enough where hopefully let's say past 50 that it will cover my losses from my puts. So either way, it's a good win if it moves dramatically. But if you do lose if Nio doesn't make a move at all. So let's say Nio just stays around $48 and doesn't move. your SOL. So that's kind of a bad thing as well. But yeah, you do have to pay a pretty big premium for this, $776 as well. So this is actually kind of a lot, but that's how you play a Strangle. And just to remind you guys, I'm not a financial advisor of any kind, so please do your own due diligence before trading or investing. All right, let's cancel these out. So the third one I actually like to do a lot is something called spreads, but spreads are pretty much like to do is called credit spreads. So you can either do a call credit spread or a put credit spread. And when doing spreads, I would like to say that you usually have a 2 out of 3 chance of winning. So right now you can see there's a lot of premium going to Nio's earnings. They do have an IV about 161% or so. So you pay for a premium right here. This is the premium that you technically pay. So let's say for earnings that Nio right now, I'm expecting Nio to move hopefully below a certain price. That would be a call credit spread. So you're bearish on that. So for example, let's say how I calculate that is you're looking at the both strike prices at Nio's price currently right now, $4.28 and $4.73. This is about a $9 move. So the market maker is pretty much predicting that Nio will move around $9 up or down. But just to be safe, I can make it maybe like $12 just to be safe on my own side. So let's say $12 of this plus this is about $60. So I can move all the way up to, that's $60, right? Yeah, it's $60. So $60 up here to the strike price. So what I'm going to do for a call credit spread, this means that I am bearish, that I believe that Nio will stay below $60, okay? So I'm going to first have to buy this $61 strike, and then I'm going to sell this $60 strike. So I'm shorting this one. So what that means essentially that I'm making a credit spread of a total of $12 for $100 collateral. So how this makes a more bigger deal, for example, let's say click continue. I can actually add more contracts to this. Let's say I want to risk $500 and I can make it $52. So $60 or so. So that's a pretty good deal. Usually 10% I would say is a pretty not bad, but of course you do have to think about if you do start to lose money, you will lose your $500 collateral that you have to put down for this. So let's look review order. It'll tell you how much collateral you have to put down, for example, once it loads. But typically I like to do credit spread just because it's a more safer way. And what I mean by 2 out of 3 is that because, for example, if Nio does stay below $60 or if it does just trade sideways at $48, I win either way. But of course, if Nio does goes past $60 and past $61 as well, you lose your entitled $500 collateral, but you keep your $60 credit right here. So not too bad, but you do lose a lot because you're putting down more as a collateral. But like I said, it is more safer, and the chance of usually the market maker being wrong is it's kind of more difficult. So the same concept if you do puts. So puts credit spread is when you are bullish. So believing that you think that Nio will pretty much stay above a certain price. So let's take a look at that real quick once this loads. But let's say that Nio right now at a share price of $48, $12 down would be around 27. Oh, I can do math right now. 26. Wait, 27. Yeah, $12. Let's say I'm gonna do around $13. Yeah, $12. So $35 strike price right there. So what I'm gonna do is that I'm gonna sell this put, and then I'm gonna buy a put below that. All right, so $100 difference, $1 difference, which is the $100 difference. So I'm putting down a collateral, pretty much $100 to make a $9 minimum credit. So that's about a 9% gain if I were to win, which is not that bad either, which I'll probably do if I were to choose credit spreads. But in general, I would say this is also a 2 out of 3 win, just because in general, like I said, you do win if it stays above the $35 strike, but also you win if it just trades sideways. So both, like I said, are pretty interesting to do, and just in general that you can win 2 out of 3 times with a credit spread. It is more safer, but you are putting more down as collateral. But if you are wrong, you do lose your collateral, which is the sucky part. So the fourth one I want to look at is something called selling puts. So selling puts is actually a good way to make kind of just a passive income in a way. And also it's good if you have the capital to offer up. So like I said, option contracts are by 100 shares. So example, let's say by November 20th, I will sell this $45 strike. So what that means is that oh, that's not the selling button. Oops, sorry. Let's cancel this. I'm going to sell this. So I want to sell this $45 strike for next week, which that entails that I am putting down pretty much a $4,500 collateral. It's good to have a lot of shares, a lot of capital to back this up. Pretty much you're saying that you will buy Nio at $45 if they hit that strike price next week by expiration. And of course you are, like I said, here's the minimum credit of 4,500 of 46.50. Oh, sorry, this is 5 contracts. Oops. Let's put 1 down. But you get a minimum credit of $293. So in a sense, you are actually getting more money back. And then you can also just buy in 100 shares of Nio at $45 strike price. It's good if you want to get a cheaper price into the stock, especially if you're long term. But you do have to pay for the 100 shares of this stock if it does hit this price. So in my opinion, it's kind of like a passive income, but also a good way to get into a stock, which is something I like to do a lot. So I like to sell puts a lot. So it's great. And the last one I have to say in general, that's definitely one of the easiest things to do and safest is to simply just buy shares of the company. Buying shares is the simplest way because there's a lot of movement already in Nio's earnings, and why are risking options to play? Because buying shares is the safest way, since if you do see a spike, you can always bail out and just sell that at a higher cost, which is great for you and a profit. But worst case, if Nio does tank down, it's equity. Those shares are equity, and you can always hold that forever and even average cost the way down. So you'll never lose that money until you sell it. So that's kind of a good way too. So what am I doing for Nio right now? So to be honest, I kind of FOMO'd out on the naked calls already, and it's out of kind of too up. So I am kind of conservative on what I'm playing. So since typically I just hate losing money, so I'm doing choices number 4 and 5, which are I'm selling a put option at $45 strike for next week, obviously. So that's a pretty good premium to get. And then also I'm just simply buying shares. Now I know I won't make as much as naked calls or naked puts, but in my opinion, it is the safest place to play. So alright, this kind of wraps up my video on how to play Nio. If you found anything interesting in this video, please don't forget to hit the like button down below and let me know in the comments what you're planning to do and what moves you already made for Nio. And good luck out there for playing Nio's earnings. Thank you so much for watching. Peace.